Hey everyone, in this video I'm going to highlight one thing that smart investors know about ZIM stocks. So let's get right into it. And that thing that I'm talking about is their variable dividend policy, which is connected to net income. So the company intends to distribute 30% to 50% of its net income as dividends to shareholders. Now, this is a different policy from what most companies have. Most companies have a dividend policy that's not strictly connected to net income. So they might say, well, this year we're going to pay a dividend of $1 per share, and our intention is to grow dividends every year by 8%, or whatever the case might be, 10%, or they just intend to grow their dividend, or they just intend to pay a dividend. They all might have slightly different policies, but not very many companies connect their dividend policy to their net income. The reason why they don't do that is because people who invest in dividend stocks tend to do so because they want a stable source of income. And if you connect your dividend policy to net income, that creates variability in your dividend payment, right? Your dividend payment goes up, it goes down, it's connected to net income, and net income is volatile. So that might turn off some investors who are looking for that stability, that regular income. So, and this is what I'm talking about here. On April 4th, ZIM paid a dividend of $6.40 per share, or a total of $769 million. However, since ZIM's net income was negative $51 million in the first quarter, it will not pay a dividend in the second quarter. So you have that variability where in the first quarter it paid a very healthy dividend, $6.40 per share. Second quarter, they're not going to pay a dividend. So investors who are retired or relying on this regular stream of income can't really do so with ZIM, which is peculiar because most often investors who are looking at dividend stocks are looking at dividend stocks for that stable income. So it kind of defeats the purpose when you have a variable dividend policy, because the type of investors that are attracted to dividend stocks want stability. And so that's why not very many companies have this variable dividend policy. However, having a variable dividend policy is more prudent than having a dividend policy that just states we're going to pay $1 per share in dividends no matter what, right? Because if you're paying $1 per share in dividends no matter what, that means even if you have negative profits or even if you have negative cash flow, you're still paying out a dividend to shareholders, which puts your company in a more pressured position, right? Just as your profits are going down, you're paying money out as dividends, and so it creates more trouble for the company that's already in trouble because profits are declining. But when you have your dividend policy connected to profits, it's more prudent because when profits go up, okay, good, we pay higher dividends. When profits go down, okay, you know what? We need to tighten our belt. We need to pause the dividend. We need to make sure we've got cash to support the business, right? So it's a more prudent policy in terms of financial management. However, it doesn't match with what investors are looking for. So there's a bit of, the pros and cons of having that variable dividend policy is, the choice that company management has to make. And ZIM has chosen this dividend policy. And investors that are looking at ZIM stock probably know about this policy and are aware of it, and they understand it, and if they own the stock, they're okay with this policy. They're okay with the variability of the dividend. It's certainly no reason to say, you know what, I don't want to own the stock because it has a variable dividend. It's not a red flag at all. It's no reason to shy away from ZIM stock. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.